Good morning. Welcome to another Mindset Meets Mechanics session. We are going to have a chat about what we're going to release in the coming week or so. So there's going to be a change to the AS public portfolio rules, and I'll just give you a little bit of background. In November 2022, we're talking about stock filters here, and in November 2022. After research that we did at the time, we decided to turn the stock filter on and leave it on in the public portfolio. Right, Dave is going to come in and join me. Welcome, Dave.
Hello, everyone.
Get across there a bit more. Get into the picture.
Yep.
Small.
Oh.
Okay, I think you're in.
Very cozy.
Right, and we turned the stock filter on. And we traded the public portfolio. We updated the investment plan with that, and then and following also that ongoing research, we also re-researched the parameter settings for SPA3 investor, and that was to do with the ASX with the ATR trailing stop, and we made some changes there and implemented those into the investment plan for the public portfolio from May 2023. And now in October this month, we've done some research, and what we are looking at is out-of-sample data focusing on this period since we went live with those parameter settings. And anything to add to that, Dave, in terms of the background leading into what we've done?
I think the important thing to realise is that as, I suppose, custodians of the systems, etc., that we pay a lot of attention to public portfolios. We also pay a lot of attention to member feedback, and we also use the simulator, which I'd encourage lots of members to also get familiar with. And the reason we do that is to monitor systems in real time. So we've got a really acute awareness of what's going on, and I think that's really paid out over the last 18 months in particular, being able to make some observations about real money portfolios versus simulations, and to make some adjustments where we think it's justified.
Correct. So that's the monitor, measure, manage. So, and part of the manage is certainly you got to manage your portfolio, but that's the monitoring and the measuring as you're going, and then the managers to do some re-research from time to time, which you can do. The mechanical system, very difficult to do with a subjective system. So we've found some stuff. So just talking about that out of sample data, again, just putting that into context, is prior to putting on the stock filter and also prior to the parameter changes, we obviously did a lot of research, running multiple portfolios, doing individual parameter research over different kinds of price data going all the way back to the 1990s. And then we make a decision, put a stake in the ground based on what the data is telling us. And then we walk forward in live trading. And then a period of time goes by and you say, okay, now let's just do some more research. We noted, as Dave just said, we're noticing stuff, we're getting feedback, we're noticing it in our own real money portfolios. Let's now go and do some out of sample research. And that is the new data that's been added since we made these decisions and put stakes in the ground. So we're going to flick up a couple of charts here, and I'll let Dave talk to those.
Yeah. So here at the moment, you'll see two equity curves, one with a stock filter off and one with the stock filter on. And now this has been, you can see on the bottom left-hand side of the screen there that we're going back over, over 12 months?
Beginning of 23?
Beginning of 23, yeah. So that was basically when we implemented the stock filter. Now, one of the things we need to keep in mind was, why did we initially add the stock filter? And we did a lot of research, and we've got to keep in our minds the biggest challenge for most investors is that of dealing with drawdown. So the idea of having the stock filter was the research took us down the path of what is a method that we can apply to our process that might have a positive impact on the level of drawdown, i.e. help to reduce drawdown in, particularly in large bear markets. So obviously we did a whole lot of simulations and realised that applying a stock filter was actually a good thing in some of those really severe bear market sorts of conditions. So we made the decision at the time to go with that. because the biggest challenge for all our members is dealing with drawdown. So let's try and tick that box and make it easier. Now, since then, as well, one of the things that we've done as a company is to introduce more training on mindset to help members deal with drawdown, and that continues to grow and develop, and we're getting lots of great feedback from that. So with that as the background, the context, if you like, going through and having a look at relative performance of portfolios, in this case, a 9-stock portfolio, which is what the public portfolio is, and going through and running some simulations since we've actually applied that stock filter, gives us a bit of an insight into how that is actually working in the market. And the feedback, and obviously also from our own public portfolios, which we go through and update every week in the weekly wrap, it's become obvious to us over that particular point in time that the stock filter was having an impact on relative performance. So you can see here in this particular period, the green line, applying that stock filter over the last 1.5 odd years, or a little bit more than 1.5 years, has really led to a portfolio pretty much going sideways. And so in comparison, if we take that stock filter off, we can see that the simulation in this case has shown that we've got more growth. So the stock filter, by applying the stock filter, what it tends to do is it's getting us into trades a little bit later. And if the trends happen to weaken, then we don't end up with as much growth in the trade result as what we may have if we had got in at an earlier level. So again, keeping in the back of our mind that idea of potential drawdown and dealing with that, if we're well versed in, we've got better skill sets, etc., then we really shouldn't have any difficulty moving to a stock filter off situation. So I think here the benefit of having the stock filter off is that it's releasing the handbrake of that the stock filter on was having. So it's giving us more performance over that particular period of time. And we can also go back and have a look at some slightly longer time frames as well.
And just to comment on that, it's this ongoing tussle between risk and reward, isn't it, all the time? And I think with the years I spent researching systems, is that the more you apply to try and reduce drawdown, the more variables that you put in, the less degrees of freedom that you give a system to run, i.e. you stifle it a bit to try and reduce drawdown, the less growth you get, but you get lower drawdowns as well. So you can't have it both ways. You can't have low drawdown and high growth. To release the growth, to give the freedom to the system, the degrees, that's what they talk about, the degrees of freedom, to let it do its thing. It means that you're going to suffer deeper drawdowns. And I remember years ago attending a live webinar with Larry Williams, presentation before we had webinars. And that's what he basically said. He said, how much drawdown can you handle? Because that is the ultimate question that we all have to answer. And the degree to which you can is the degree to which you're going to get greater returns. Just look at the leverage portfolio. Right. Moving on to a longer time frame.
Yeah, so this is the same window, if you like, as what the public portfolio has been running for. And you can see the difference between the two. Now, for the vast majority of it, they're fairly similar in terms of sort of relative performance, but it's more in recent times where we've had a period of perhaps a sideways market moving out now, sort of particularly in the Australian market, sort of really starting to break out into all new time highs, that of more recent times, having that stock filter on, again, we can see the handbrake that's been applied there. And again, we need to be mindful. If we've got at the end of the day, we've got a rules-based system which has exit signals. And that's really important, because at the end of the day, following those exit signals and how well you're able to do that is going to have an impact on what actual real drawdown you experience in your own portfolio. So if you're good at following the system, etc., then by taking that stock filter off, it's going to open up the gateway to relative, more performance than having the stock filter on. So from that point of view, there's going to be some changes that we're going to be making to the public portfolio and investment plans, and so we'll be updating that, and we'll be taking the stock filter off. Now, from that point of view, in Beyond Charts, we're going to automatically in the background update the settings. So what that's going to mean, you won't need to do anything at all, is that we will automatically update your Beyond Charts profiles. So there'll be a new release, and don't worry, we'll let everybody know when the new release is coming, so you're all ready for it, and give you plenty of notification through messages on the forum, also via emails, and also an alert in the app that we'll send out as well to say, hey, please note, we're turning this stock filter off. So from that point of view, you won't need to adjust anything, any settings, etc., within Beyond Charts. So that's all coming.
One thing to add to that, it's only going to be the default parameters. So if you've set up any of your own parameter settings, yes, I know some of you really turned the stock filter off, then those aren't going to be touched. Yep. So, but if you don't use the default parameter settings, and you do a stock filter on in your own private ones, we won't be touching those. So the stock filter will stay on in those default parameters. So yeah, and the timing on this, next week sometime, we want to obviously move the public portfolio to this as soon as possible. We've just got a little bit more testing to do, and we also do, although they're not connected, there will be a new release of Beyond Charts coming out into beta probably mid to late next week. So, and that's got other things going on in there as well. So there's going to be two things happening, and we'll be communicating with you through all the different means that we have to do that.
Yeah. So part of this research, we verbalized it, but we've also put together a white paper as well. Now that white paper will be embedded into Beyond Charts. So again, under the Home tab, there's a Documents section where all our investment plans, etc., are also housed. But there's a section that you'll be able to go down to and see the original white paper. So all the original research that we did a couple of years ago now, you'll be able to see all that information. So down there underneath the white papers there, you'll see the re-optimization May 23, third one down. That's all the original research that Gary did, spent a huge amount of time in that. So you'll be able to go through that and refer that to the original research, and then we'll add the more current research as an extra document that you'll be able to go in and read as well. And we'll point to that in the upcoming emails and notifications as well.